Hello folks, Sid Miramontes here with Miramontes Capital's weekly market update. This week news, we have Amazon reporting lower than expected profitability because their expenses went up a little more than expected because they're building out their infrastructure for their grocery store platform that they're looking at starting here very shortly. We also have Tesla reporting better than expected profits, so their stock had recently just jumped up after hours, but now the stock's come down a little bit, but their profitability has impressed investors by having a bigger profit margin than what was expected as well. Folks, this week I'd like to cover, as I've heard from Jason over at Chevron asking a question, Sid, where can I put my money if I'm concerned about the markets and I want to be more conservative right now? Well, one place you can take a look at, Jason, would be you want to take a look at short-term bonds. And short-term bonds typically are bonds that are anything from 90 days all the way on up to 36 months in term. So anything from 3 months to 36 months. The reason why I like these bonds on the conservative side is because if interest rates start going higher, you're able to catch the interest rates as they move higher. And if you're concerned about the markets, if you're concerned about the stock market right now having a lot of volatility to it, this would be typically would be a more conservative area if you're looking at investments or bonds that have high credit quality. So that would be in the A-rated quality or higher. That may be a better place to go for your capital. That would be on the short-term side. That is a little more conservative than you'd be in stocks. Also too, if you're looking at something that's a little more conservative, you can, if you're really that concerned about the markets, you can move the cash completely. You can move monies to money market and move assets there and be all the way out of the markets or mostly all out of bonds as well. And that is a very, very conservative state typically as well. And then finally, you can also take a look at if you want to downsize but not move all the way out of stocks. If you have all your portfolio in stock investments, you could take a look at a balanced type of fund where it invests in 60% of its money in stocks and 40% of its money is in bonds, or 50% of its money is in stocks and 50% of its money is in bonds, or even 40% of its money is in stocks and 60% of its money is in bonds. And that would be a balanced fund. So you have to make sure you take a look at the last area and see how much stock versus bond mix you want to have. And typically that has a little less risk in the overall market. So short-term bonds would be a first place to take a look at. You can also take a look at cash or money market rates. And then finally, you can take a look at a balanced fund to have your capital into. So those would be three places that would be more conservative than having all your money in stock investments as far as taking a look at, hey, I want to lower the risk of my portfolio. So with that and any other questions, folks, we look forward to your time. Thanks so much.